I want to go to the next topic if we can, please. This is the rise of Nepo buyers. And so basically this has to do with like financial gifting in real estate, and nepotism is what it is. So, we're family because of marriage. And if I'm like, hey, Uncle Nemo, I need to borrow $200,000 to go buy a house, that would be an example of the family lending a gift, or not lending it, giving a gift to someone in the house, in the family line in order to go buy a real estate or whatever. And this is on a very steep increase. It says here 38% of home buyers under 30 years old received family help for their down payment. I'm not surprised by that crazy. At all. Are you?
Andy, what if I told you that the biggest advantage in today's housing market, it's not your credit.
It's borrowing money from your mom and dad?
It's your parents. How crazy is that?
Now, there's a couple angles of this, right? Because the I'm just going to say the boomer generation to kind of identify the collective we're talking about. There are some that are outside of the boomer generation that are doing this, but I'm going to say that because of my own age. That generation saved as a part of fiscal responsibility regularly. They were taught that by the generation ahead of them. And so there's these benefactors, I'll say, then 30s, late 20s, early 30s, even in the early 40s, that are the benefactor of this saving behavior and habit that's built in to the boomer mentality.
Yeah, that's awesome. I mean, the Nepo, right? Nepo buyers, not Nemo.
Not Nemo, right? Uncle Nemo.
But we're still there in the Metis, right? Like it's building its own right there. And again, it just becomes like, like just like Nemo, the dad just taking care of their son, putting him in the right place, putting him in the right housing environment. That's what us parents are looking to do, again, because of what you just stated. These generations are changing now. We're changing. We're evolving to just pay more attention to what's going on in our environment and learning to adapt. Like for instance, we're currently adapting by looking at certain opportunities differently. We're adapting by actually with the new rules and regulations in California, how they're giving you the ADU rules. What are we looking to do? We're adapting to, hey, we see this land that our kids were probably throwing the football. They're older now. How do we build on that?
Yeah.
And then that's evolving. That's really helping. And so we're creating that wealth. And then we have this wealth, we can extract some of that equity because we gave it that forced equity into it. And so why don't we help our children just kind of go out there and do this now?
Yeah. And for those of you who are like, maybe it's not as obvious to you, what we're really revealing here is that we sit around here at the office and we talk about this as family members ourselves. We have the generation above us, we have our generation, we have our kids, and then in your case, a couple of your kids who have their own kids, grandpa. And so we sit around and talk about how do we gather real estate into a family portfolio that then becomes part of what the subsequent generations will be the benefactors of themselves, just like we're the benefactors of those ahead of us. So whether it's financial assets, it's real estate assets, or a combination of those things, this conversation is on to our mouth all the time. And it's clearly happening with a lot of other people too. Yeah. You have parents who are willing to gift their adult children the down payment money, the cost for closing cost credits, whatever. If it's repairs or updating the house, they're like having the same agreement we're having, which is if they can't do it on their own, I'm going to help them do it so they can be in. Yeah.
No, it's crazy. More and more first-time home buyers are not scraping money for their savings account. What they're actually doing is they're leaning more towards the bank account of their mom and dad, which is pretty nuts. Currently, and again, I like to use real life scenarios because we're going through them. I do have a client that's looking to purchase, they're purchasing a home in Bonita. They currently own a home in Bonita, by Bonita High School. And it's a 2-story. And so what they're looking at is like, hey, Will, you refinanced us when we did. Our rate's 2.25%. We don't want to get rid of this. We owe $450 and the value's like 1.1, but we want to go to like a 1-story. Oh, and then the new house has a pool. We want to just kind of for exercise and for our family to grow. We are going to be grandparents too. We want an environment where our grandchildren and we can, just host family. And so they're buying this property down. And the first thing I said, Renat, what are your intentions? She goes, oh, my son's just getting out of boot camp. He's going to get PCS orders to San Diego. And so what I like to do is put him in his house.
Wow.
That avoids the whole down payment.
Yeah.
It avoids all of that stuff. And, you know, what's cool about that is her payment's like $2,600. You know, he's an officer getting out. He's probably going to get like $3,900. She's probably going to charge him the full amount. And, you know, it's still a really good price for that rental.
Yeah, his BAH is going to adequately cover her cost of the mortgage plus some.
And
it's not going to dent his income, but and then he'll be in the lineage of inheriting that down the line.
So we're seeing...
What a great scenario.
So we're seeing these things, Andy, partake in different ways. It's not just going to be monetary. Here's the money. It could be... hey, departing residents, I'm going to leave for my kids.
Now, so one of the things I think where we kind of find ourselves in the position of time is this, where there's a lot more millennials doing this than Gen Z, partly because the millennials are older, but also the millennials are more in their peak earning years, and the Gen Z are coming into their peak earning years and still have more of those years ahead of them. So right now, it's estimated that 16% of Gen Z are homeowners versus 31% of millennials, but I actually think what's going to happen is Gen Z is going to probably surpass millennials. I think some of the millennial behavior is still stuck in that 2008, 2009 bottom falling out of the market. And oh my gosh, when I was a kid, my parents lost their house. I don't want to own a house. Yeah. I know that psychology is running around because I hear it. In Gen Z, though, they're like, hey, I was born and I had a phone in my hand already and social media, had my own profile when I was 1 month old. And how many people in that space are talking about house hacking, buying multiple properties, finding passive income businesses, getting creative with cash flow, and the entire approach about what owning real estate looks like has changed. We've been doing this for 20 years now. Yeah. And it's definitely markedly different than 2005 when we had our first office and literally is all about buy a house, buy a house, buy a house, buy a house, right? It's completely changed. So I am estimating that the Gen Zs are probably going to surpass the millennials by the time we get to like this relative point in history where they're the age that the millennials are now. I think we'll see that Gen Z would have surpassed them possibly.
I agree. I mean, there's more information going on out there, you know, and again, why is this trending? Why is this trending so much? Because we're still seeing home prices high. We're still seeing interest rates. They're still high, you know? And so, you know, we're starting to see more families wanting to just combine efforts together. So that's why this trend is going out there, which is pretty crazy. I never thought of Nepo Buyers, but there it is.
Well, I think some people, they have to do it by force. And I think others are doing it by choice. Yeah. And both are good. I don't think that they're necessarily bad, except for when you're doing that and your financial behavior is a little bit of loosey-goosey, you know? If you don't know how to like keep your budget underneath what you spend every month, maybe buying a house isn't the right choice for you. Maybe your parents giving you a gift fund is not the right thing for you. You know, there's some of that kind of stuff, but that's very highly personal. Yeah. As a theory and as a practice, I think doing this by choice is definitely a good way to go to get into real estate if you're in the millennial or the Gen Z demographic.
And I mean, the cool thing about those with family support, they can skip the grind and go straight to the offer table, right? With a bigger down payment, which is and they can remove, you know, they can have lower contingencies. It's kind of like when you're playing Monopoly, Andy. It just says right there, skip. Go to jail and get straight to go.
Do not pass go. Go straight to jail. Do not collect
that one. No.
Do not collect $200.
These guys are doing the reverse, right?
Yeah.
You know, just cancel jail and go straight to go and let me give you that money again.
Go straight
just
to Park
because
Place.
That's how you do it. Just go to Park Place.
Boardwalk.
That's what that feels like.
Oh
you
my
know?
gosh.
But you know, there's also the other people who just don't have that type of support.
Yeah.
And the cool thing about that is there's down payment assistance programs that are being offered out there. There's house hacking where you can buy that property, go in it with somebody else. You know, you could go in there and partner with the co-signer. So there's multiple ways how you can go about purchasing a property and hacking that.
One of the first loans I did in 2006, actually, no, was 2005? No, it might have been 2005. I think one of the very first loans I did was a friend of mine lived up in the Orange County area and a former coworker of mine. And she and one of her college friends bought a house. and lived at it together. They were not married. They weren't even together. They weren't like boyfriend-girlfriend situation, but like, hey, we're two single people. We know we want to buy in this area. We both want to live here. Instead of I have an apartment, you have an apartment, we're friends, let's just get a house. They actually co-signed and bought a house together back then. They both had some down payment money, and we're talking 20 years ago. So even though it was in Orange County and it was more expensive than the rest of the country, it was still way less than it is now. And that was their house hack, and we're talking 20 years ago. So that pursuit of solving it, I think, goes back to the whole behavioral thing. The way that the younger generation is looking at owning homes and owning real estate has completely changed. They absolutely look at it as more than just a home. It has to create some sort of cash flow later. It has to create value and an asset for themselves. And for families that are not having this conversation, I would implore you to please start talking about money with your kids. Start talking about real estate with your kids. If they're of the age where they understand the concept of money in, money out, credit, debt, assets, start having those conversations. Talk about life insurance, talk about real estate, talk about investing, talk about saving, and include them, answer all their questions. And if there's something you don't know, go learn it together.
Yeah, no, absolutely. I mean, whether you're backed by parents or doing it alone, knowledge is your power play. Got to take advantage of that. And that's why we get onto these things, to share that information, go out there and empower you so you can go out there and get it done, or just to plant a seed. And how do I go about this? You know, it just kind of gives you a different direction of thought of how I can make this possible if I'm really looking to be a homeowner.
Yeah. Yeah.
And so
that's a good one.
This is, you know, Nepo buyers are changing the way we're doing things. They're changing the way new generations are purchasing homes. Mm-hmm. And I love it.
And, and I'll tell you, this is going to be, again, a little nerdy. Hey, you don't like the way house prices look right now? Guess what? People who are doing what we're talking about are helping secure that home price where it's at. If they're buying it for market value as listed right now, or maybe even just a little bit below, that's like locking in yet another comparable that's going to be put up against the house you're looking for when you come to buy. So this is happening. You need to understand this is occurring in the market that you're also looking at are the people that have cash, have money in the family, and they're helping the next generation buy a house. Yeah. So just know who you are in the ring with.
Yep, exactly.